Hi there, Sharon Horne-Ellstrom here. Welcome to day 165 of our Get Your Goals annual challenge. We're doing one thing every day to get what we want, right? Because if we break things down into tiny bite-sized pieces and we do something every day, we make it a habit, we make it automatic. Achieving what we want in any area and aspect of our life becomes a lot easier than if we don't do anything for months or even years or decades, and then all of a sudden we decide we want something and we have to push and work super duper hard to get it. I have found a long time ago, I've been doing annual challenges for literally, I think most of my life. I started doing them when I was a little girl, not because anybody made me, but because I wanted to learn and grow, and I was always curious about stuff. So today we're talking about the fifth key indicator with respect to our financial goals, our financial health and well-being, because our goals are usually in the direction of wanting better financial health, financial well-being in any area and aspect of our life. Remember, we've got the 9-part life framework that we're working with: physical, mental, emotional, spiritual, financial, which is this month. Relationships, contribution, communication, and confidence are the 9 areas that I break my goals and objectives down into. I have big lifelong legacy goals, and we've talked about this before, and I break them down into 25-year, 20, 10, 15, 10, 5, and then annual goals. And I take those goals and I break them down into even tinier and tinier pieces. So I get to the point where I can do something every day that moves me toward those things. And I like to combine the different areas and aspects of my life so I have one action that contributes to many of them. Because I know if I increase my communication or my confidence or my physical well-being, it has a positive impact on every area and aspect of my life, financial too. So today we're talking about investments. We're going to talk about 4 reasons why we want to have financial goals, 5 reasons or 5 factors that come into play when it comes to deciding what type of investments we're going to have. And we'll talk about very briefly 8 different types of investments. As usual, in Guide 17 of our private Get Up and Go Challenge Facebook group, you can go to Guide 17 and you can find today's write-up, which goes into more detail than I have time for as I'm speaking, and a lot more detail than a lot of us need, because we've been investing in these different type of things and we know why we want to invest. And our action item today, might as well get to that right off the bat, is ask yourself, what's your investment situation now, and then what do you want it to be? Because we always want to be identifying that gap. Sounds like the SOAP framework, doesn't it? What's your current story? What's your desired story? That's the gap. How are we going to fill that gap? And we set goals to help us fill that gap. And we use the SOAP framework and the goal setting process that we're going to talk about in a few days. Every month we're talking about that goal setting process. So just like the SOAP framework, we can install it in our subconscious and make it automatic, make it a part of what we do and how we set goals and objectives in all areas and aspects of our life. So let's talk about 4 reasons to invest. And we've talked about these a little bit, but with a little bit different tweak with respect to investing. 1, wealth accumulation, right? We invest because we want to make more money. We want to use our money to make more money. We want to use our resources to create more income and flows in our life. We want to have retirement planning. Most of us plan on not dying and retiring, and so we want to have the funds and the money so that we can retire in a way that's comfortable to us. We don't want to have to work until we're 90 something or until we die or work ourselves to death. We want to have some kind of a plan to be able to retire comfortably. We want to invest for portfolio diversification. Why do we want to diversify? Because like everything else, some investments, they all go up and down and up and down and up and down, right? So we don't want to have all of our eggs in one basket. Oh, an idiom. We want to make sure that we have some variety. I learned that lesson in the late 2000s when the entire tech stock market totally crashed. My ex-husband and I had lots and lots of money invested in that, and we just watched as hundreds of thousands of dollars a day was lost from those stocks. And unfortunately we didn't hang on to them, and we actually realized those losses. And so those are, and then inflation hedge, which is really, really important right now, right? We're living in a time, and again, inflation is another thing that ebbs and flows. Right now we're in a high time of inflation, despite what the government and the news media tries to tell us. If you've gone to the grocery store, and I haven't, but I shop online, and you look at the price of anything, you'll see that in many cases it's doubled, tripled, quadrupled, or more for just plain everyday commodities and things, which hits those people with lower incomes harder than those people with higher incomes. And so we want to be able to hedge our bets against inflation by having investments in a diversified portfolio. So what are some of the factors? Let's talk about 5 factors when it comes to deciding what types of investments we will make. Number 1, risk tolerance. How able are you to handle risks? Some investments are very, very risky. I think of the stock market as super duper risky because I have zero control over that and over the prices of stocks, right? It's determined by the market and everything else outside of me. So how tolerant are you for risk? And I had just shared my example of why I'm not very risk tolerant when it comes to the stock market. Secondly, time horizon. How much time do I have? I am now 63 years old, so the decisions I make now about investments and the type of investments I get involved in are very different than when I was in my 20s and 30s, right? When I was in my 20s and 30s, I could invest in anything I wanted. Didn't matter how risky it was because I assumed lots and lots of time to let those investments grow and do their natural variation to end up in the direction I wanted them to. What are your investment objectives? Number 3, again, are you planning for retirement? So you want a safe type of investment that's just going to protect your principal and grow a little bit guaranteed over time? Or do you want to gamble with your money? Are you willing to take more risks and your objective is just to make as much money as you possibly can, as quickly as you possibly can? It depends. It's going to make a difference in the investment vehicles that you choose to participate in. Again, diversification is important. We want to have some risky things, some not so risky things. And again, depending on your risk aversion, or tolerance, depending on your time, how much time have you got? And finally, research and analyze stuff, right? Do not blindly put your faith in someone outside of you because they probably don't have your best interests at heart. They'll say they do, they'll act like they do, but they probably don't, because everybody on the planet has to take care of themselves first. So they might not put you in the best vehicles for you. They might only put you in the vehicles that their particular company offers or is promoting or wants to move because they get bonuses, etc. Everybody's got their own reasons for doing things. And so don't assume that we know people's intent and reasons. Now, don't not trust people, but also be smart about it. Finally, what are some different types of investments? I'm just going to briefly mention these, and if you want to, you're going to research and analyze them to see if they're right for you based on your criteria. I actually like to take this 5 criteria: risk tolerance, time horizon, my investment objectives, diversification, and results and analysis. And I like to kind of keep an eye on those. You know, I like to rate things on a scale of 1 to 10. 1 being bad or negative, 10 being positive, good, 100%. And I like to ask myself, where am I at in each of those areas? If I know that I'm very risk averse, I'm probably going to do things to be more open and flexible and do more research and analysis to help reduce my aversion to risk, etc. All right, so what are some types of investments? Of course, we know a lot of these: stocks, bonds, mutual funds, real estate, one of my personal favorites, and have done a lot of work in that area. Exchange trade funds, not familiar with those. Commodities, am familiar with those. Cryptocurrency, I have chosen not to participate up to this point. And options and futures. Again, each and every one of these could be a dissertation or a discussion for a PhD level course. You have to decide how much do you want to know about them and how much research and analysis you want to do, etc. So, okay, what's our action item today? What do you got for investments? If you don't have any, maybe you want some. If you don't have any and you don't want any, then you can probably skip today's lesson. But I would caution you to plan for your future, and part of that includes investing in your future. If you work for a company, a corporation that has a 401k plan, especially if they have a matching 401k plan, I will highly recommend that you participate in that to the fullest possible way. I worked for a company and we had a 15%, up to 15% match. So guess what? 15% of my income came right off the top and went into that 401k plan. Why? Because that 15% became 30% of my salary, which was pretty substantial back then, that was being invested for me, and I got to choose what it was invested in. I had some stocks, some mutual funds, some other things. I probably had some of these, you know, exchange trade funds, and I didn't even really consciously know it. But I know that we need to put our money, put our income some of it at least working towards. It's just like savings. A lot of people think they don't have to have any savings, but I've been in this situation where you can really get burnt if you're not prepared for some of those things. I think most of us have. All right, any questions, hit me up. Otherwise, I will see you tomorrow. We're going to go on to yet another financial key indicator, because I want to cover these so we've got a foundational knowledge of the different topics with respect to financial goals, financial wealth, and financial health, financial well-being. All right, have an awesome day. I'll, of course, be with you tomorrow.